With Ondas Inc. trading at $10, bracketed by a volatile 52-week range spanning a low of $3.20 and a high of $15.28, the ticker has firmly re-entered the crosshairs of aggressive momentum chasers and institutional accumulation algorithms alike. Daily trading volumes regularly eclipse tens of millions of shares, capturing the speculative fervor of modern retail trading platforms and social media finance hubs. Yet, as standard financial media pundits breathlessly reduce the company to a simple binary bet on drones and radios, they completely miss the fundamental physics and structural reality governing modern industrial automation. The real story here isn't about flying cameras or basic wireless gear. It is about solving the extreme data throughput bottlenecks and mission-critical latency walls that threaten to paralyze modern critical infrastructure. For decades, railways, electric utilities, oil and gas pipelines, and defense networks have operated on a patchwork of legacy communications and disconnected localized monitoring. As these heavy industries race to deploy real-time artificial intelligence, automated safety systems, and continuous remote monitoring, they run headfirst into a brutal spectrum bottleneck. Public cellular networks are prone to congestion, vulnerable to cyber threats, and structurally incapable of guaranteeing the deterministic ultra-low latency links required to operate automated systems across vast, remote geographic expanses. Wall Street models often price Ondas as if it were just another hardware vendor competing in a crowded, commoditized market, ignoring the immense switching costs and proprietary software-defined architecture that lock enterprise and defense clients into its ecosystem. When the market prices a mission-critical infrastructure gatekeeper like a consumer gadget maker, a massive structural mispricing occurs, laying the groundwork for a violent re-rating as institutional capital wakes up to the true scale of their order book. Peeling back the layers of daily trading behavior reveals a classic institutional playbook at play in Ondas shares. Amid broader macro jitters, rising interest rate anxieties, and erratic sector rotations, retail traders on platforms like Robinhood and StockTwits routinely get whipsawed by sharp intraday swings. Every time macro headlines trigger a broad small-cap sell-off, high-frequency trading algorithms exploit retail stop losses, creating artificial liquidity vacuums that drive steep emotional pullbacks. Behind these volatile price convulsions, however, steady institutional accumulation is quietly taking place. Major index funds, specialized robotics and defense ETFs, and smart money block traders use these liquidity dips to absorb float, steadily tightening the available supply of shares just as the company's fundamental catalysts accelerate. Recent corporate milestones, such as securing massive multi-million-dollar orders from the U.S. Army and expanding critical defense and industrial footprints, demonstrate that this is no longer a speculative venture struggling for validation, but an enterprise scaling rapidly into prime contractor status. The sheer velocity of recent order inflows, highlighted by tens of millions in fresh contract announcements that sent shockwaves through the order books, proves that Tier 1 institutional buyers are positioning well ahead of consensus earnings beats. This dynamic creates a tightly wound spring where any positive revision to revenue execution can trigger an aggressive short squeeze and an immediate surge past psychological resistance levels. Before we dive deeper into the operational engine driving this growth, let's pause right here. Are you currently holding a position in Ondas through these wild swings, or are you sitting on the sidelines waiting for a deeper macro pullback to initiate a starter tranche? Let me know your strategy in the comments below. To understand where Ondas is heading, we must completely strip away the outdated historical framing that categorizes the company as a legacy telecom equipment provider or a boutique commercial drone startup. The modern business operates through two tightly integrated, highly synergistic pillars: Ondas Networks and Ondas Autonomous Systems. The Networks division centers around its patented FullMax software-defined RDR platform, a technological breakthrough designed to build secure, wide-area private broadband networks for mission-critical industrial markets. Unlike standard commercial wireless architectures that buckle under heavy industrial interference and vast geographic isolation, FullMAX carves out dedicated high-capacity spectrum slices that allow operators to manage heavy data loads, real-time telemetry, and critical command and control functions over hundreds of miles with zero margin for error. Completing this connectivity backbone is the Autonomous Systems division, anchored by advanced automated drone platforms like the Optimus system and sophisticated counter-UAS defense technologies like the Iron Drone Raider and Centrix. While retail investors often visualize consumer quadcopters filming vacation videos, Ondas builds fully autonomous dock-based robotic systems that operate completely unmanned in hypersensitive environments, ranging from border security and military installations to sprawling oil refineries and rail networks. By combining proprietary wide-area private wireless connectivity with autonomous aerial surveillance and counter-drone defense, the company has engineered a closed-loop data ecosystem. Industrial and government clients are not merely buying hardware, they are integrating a mission-critical nervous system that automates physical security, asset inspection, and regulatory compliance, transforming high-cost manual labor into automated, software-driven operational workflows. Looking across a multi-year horizon, Ondas sits at the center of several powerful, non-negotiable secular tailwinds. The global escalation of geopolitical tensions combined with aging critical infrastructure in the West is forcing governments and mega-cap industrial enterprises to aggressively ramp up capital expenditures on perimeter security, border defense, and automated monitoring. The proliferation of hostile drone warfare has turned counter-UAS capabilities from a niche defense experiment into an urgent multi-billion-a-year fiscal priority for military and domestic security agencies alike. Furthermore, as rail operators, electric utilities, and energy giants modernize their grids to handle decentralized power generation and stringent regulatory mandates, the demand for secure, private broadband networks will compound exponentially. Yet, an objective masterclass analysis must also confront the operational and structural risks inherent in high-growth defense and industrial plays. Execution risk remains a central hurdle. Scaling manufacturing capacity to meet multi-million-dollar government and defense orders requires flawless supply chain management and disciplined working capital control. Government procurement cycles, while lucrative, are notoriously lumpy and subject to bureaucratic delays, shifting political priorities, and rigorous compliance audits that can cause lumpiness in quarterly revenue recognition. Additionally, as a growth-stage enterprise scaling towards sustained profitability, the company remains sensitive to macroeconomic shifts in cost of capital and equity dilution pressures if capital expenditures outpace internal cash generation. Despite these near-term friction points, the core thesis remains anchored to an undeniable reality. When nations and critical industries face unprecedented security threats and structural data bottlenecks, they turn to elite technological gatekeepers who can deliver secure, autonomous solutions at scale. Looking past the daily price noise, short-term algorithmic volatility, and media oversimplification reveals a company quietly hardening the physical and digital backbone of modern civilization, making disciplined, long-term positioning a compelling strategy for those who understand where macro infrastructure budgets are inevitably flowing.